Well, it is time to talk about the top 5 growth AI stocks that you want to add to your portfolio right now. Don't worry about subscribing, tapping the like button, or looking for the coaching and Discord link. We will get right to that. Don't worry, I promise. Let's get right into the top 5 AI growth stocks and the ones that I think you should be adding to your portfolio right away. So first we have to define what a growth AI stock is. And in my opinion, it's a stock that either A, hasn't reached any form of maturity or profitability, but has a lot of potential, has a very, very low price to sales, meaning it's below 15 and ideally below 10 with lots of room to grow. And not only that, already have their foot in the door and people recognize the company and they're already doing business and they have free cash flow in the positive. All of these are good things. You always want to pick companies that have free cash flow in the positive with low amounts of debt. And sometimes low debt is hard to find, but you don't have to find AI stocks that are profitable because we don't expect growth stocks that you're buying into early with exponential growth potential. You don't expect those companies to be profitable right now because if they were, they wouldn't be as affordable as they currently are, and they wouldn't have as much growth and therefore maybe wouldn't be considered a growth stock. For example, you wouldn't be able to find an AI stock and call it a growth stock if they're already profitable, which would mean their price could be $30, $40, $50, or even $100 a share. That really wouldn't make for much sense now, would it? However, there are some exceptions to the rules, as there may be some stocks that are $50 to $100 a share, but quite simply because they have low share flow. These are the things that I really want to explain to you up front right now before we get started. Typically, growth AI stocks have a very high share float, meaning their market cap might only be 50 million or 60 million or 100 million or whatnot, but they have millions and hundreds of millions of shares floating, maybe even billions, meaning you can get the stock for $2, $5, $10. Usually between 5 and 25 is where a lot of growth AI stocks are, SoundHound being one of them. But we also have to take into account there are some stocks that have a much higher price because the share float is lower. When the share float is low, then typically the stock price, almost more times than not, is higher. Doesn't necessarily mean it isn't a growth stock. Snowflake compared to Palantir is a perfect example. Palantir is much better stock, valued a lot higher and a much bigger market cap, yet the share price is almost a third, just a little bit under a third of the price, 70 versus 165 or 170. So it's a very drastic difference, but that has to do with the share float, as Snowflake only has about a third or a quarter of the shares floating that Palantir does. So don't be confused by price. Price really is irrelevant as far as value of growth or projected guidance on price to sales and price to earnings. So the top 5 stocks I picked here, you are going to want to start looking at into your portfolio. And we're going to start things off with number 5, Upstart. Look, I know what you might be thinking. Corey, Upstart's not a good company. I shouldn't be investing in Upstart. Why would you pick Upstart in the top AI growth? Well, I told you to buy Upstart in my previous videos. That's right. Back in May and June, I told you guys to buy Upstart when it was $20. So Upstart, in my opinion, and a lot of analysts' opinion, is going to skyrocket in the next 6 months to a year. Considering the AI craze and the AI 2.0, Upstart is an AI cloud-based holding company. Upstart, in my opinion, is really looking strong. So I want to go over the technicals, the fundamentals, the PE ratio, stuff like that, and show you guys what I think's going on and where I think Upstart is going to be trending. Then I'll show you guys some trade ideas that you can get into, because I really believe Upstart is going to be working its way in an upward direction over the next 2 to 3 months. Right now, it's really at a rock bottom. Let's dive right in. And I told you this was going to be a great stock. Upstart peaked almost $90. Had you listened to my recommendation back in May, which was just over 7 months ago, you could have had yourself a 400% return. Upstart isn't done. It's dropped just like the rest of the market as it slid this previous week. But you have to understand what Upstart is. They are an AI lending platform. They use proprietary AI technology to match borrowers with the lenders and the products they need for credit. So you can't expect a company like this to flourish and boom when we've had a previous pandemic and we've had a bearish market in 2022 and 2023, and things did not get better until about the last 6 to 8 months, which just so coincidentally seems to be the exact time frame when Upstart started doing a lot better. Upstart looks to be a great stock, especially for the future. So if you guys want to invest in growth AI stocks, this is the number 5 pick. Let's go over the financials right quick. So when you look at the chart, I told you guys to invest in Upstart back around here when the price was fluctuating between 22 and 28. And this would have been your growth. Now, without taking into account future guidance on AI, Donald Trump presidency, and Bitcoin and Dogecoin and Ethereum and cryptocurrencies going up, with the market going in the direction it is. Now, with President-elect Donald Trump taking office and cryptocurrency going to be doing better, AI stocks will do better, the economy will be better, and that'll be the perfect opportunity for Upstart because nobody's going to be looking to get credit or get matched with credit products when the economy is down. You see what I'm saying? This makes no sense. And this is why Upstart has had serious issues growing up until this past 6 to 8 months, is because of inflation, the unemployment rate, the bearish sentiment in the market leading up to 2024, which really wasn't fully bearish, but it was not that good. And the economy has not been that great until about the last 6 to 8 months. Things are improving, and this last 2 to 3 months are even better. But the fair value on Upstart right now is probably more or less around $30 to $40. It is a little overvalued in my opinion, but it's only because of the current situation. If we price in future guidance, I can see Upstart breaking $100 in 2025 because their earnings, as you can see here, are getting better and better. They are just about at break even. They should break into profitability in February or in their next earnings in May. So either the first quarter or second quarter in 2025, Upstart will break into profitability and they should do very well closing out 2025. Let's look at price to sales, which is a great indicator to show you guys how a stock is potentially going to perform in the future. They have a $6 billion market cap and their financials are just over, well, almost 600 million a year trailing 12 months. So if we divide 6 into basically 624, we are going to divide this in the calculator so you can see how it works. So we're going to take 624 divided by 560. We are going to get a price to sales of 11.1. Okay, 11.1 is really good. It's about on par with Apple. As far as a growth stock is concerned, it's a little on the higher side for a growth stock, which basically gives me illustration that they're not generating as much profit as they should be, but it's indicative of the economy being very poor. They have generated some decent revenue, a little over $500 million a year, 162 million a quarter, but their operating income is in the negative. They have gross profits that are good, but pre-tax income is barely negative. They've went from 40 million in the negative, 100 million in the negative, 64 million in the negative, all the way to -6. So they're about to turn the page, which you want to get into a stock like this now, because when they do turn the page and they start going up, now you are collecting profits along the way. Net income in the negative, barely in the negative in the previous quarter. EBITDA is also in the negative, but getting much closer to zero. Where things look much better is their debt is not that high and their total assets do cover all debts and liabilities. So they're not in the hole. Another good thing about the company is that they are cash flow positive, which is the most important thing for a company. If they're cash flow positive and not profitable, they can work to profitability. And this is the beauty for Upstart right here. They are cash flow positive. There's no way for a business long-term to survive with negative cash flow. They have positive cash flow. This will give them the time they need in order to grow further and become profitable. Cash flow positive is very good. The number 4 stock in this video I have talked about before, and right now is the time to buy it. And I will dive in and explain why now is the time. Number 4 AI growth stock to buy right now is Intel. Now you might be thinking, Corey, you're out of your mind. Intel is down. This stock is no good. I agree that it's been beaten down, beat up, and curb stomped all year. And there's good reason for it. And there's also even better reason why now, this very second, is the time to buy Intel. First and foremost, as part of the US Chip Act, they received as part of the US Chip Act. So Intel has been awarded $7.87 billion. almost $8 billion to help with their funding for building new factories in Ohio, Arizona, and Oregon. And not only that, there's other chip manufacturers that are getting grants to build chips and expand in the United States as well. This is going to be very strong for Intel, as they're going to be also building chips for the military, as they have military contracts. When you think about that in its own right, that is very strong. However, let me show you some other things that are also strong with Intel. When we look at the market cap of $84 billion, they have $54 billion in trailing 12-month revenue. So we're going to bust out the calculator and we're going to divide 84 billion divided by 54, and you will see they have a price to sales of 1.5. Apple's is like 10, Upstart's is 11. That's right in the normal range. A little bit lower is even better. A 1 is stellar. SoFi had a price to sales of like 1.6 or 2.1, and they went all the way up to like 5. That's how much they've grown over the last couple of months. Goes to show you how price to sales works. It gauges the potential profit making of a company in the future. Right now, Intel has a seriously strong price to sales. Their price to sales was actually higher about 8-9 months ago because their market cap was also higher, which means their price to sales was higher. Right now, it is time to think about Intel. Not saying that Intel is going to rush and jump up tomorrow, probably not even next month or the month after. Maybe it will, but I'm talking about 6 to 8 months or a year down the road, almost surely better than it is right now. We look at earnings and we can see that they're down in the gutter. However, their guidance says 12 cents EPS for January. If they beat this on earnings, if they beat 12 cents and they beat the revenue, and this grant is going well and their expansions are going well, and just barely, they just barely have to beat any of this stock's going to go up. They beat earnings in January. It is highly likely that Intel will be in the high 20s, maybe even $30 range, but I would say mid to high 20s is very likely. We look at the price right now, it's $19. This is a very good price. Intel's never been lower, and it has a lot of support here at $19. This is a very good price point. If it drops a little bit more to say 17 or 18, then I would dollar cost average. If the next 2 and 3 earnings stabilize and they meet or beat all of them going forward, even at small amounts, the stock is going to go up. And quite honestly, even if they miss earnings by a small or marginal amount, it's probably not going to hurt the stock that much because the previous earnings, they missed by a lot. And this was before the grant. This was back in October. And if we go back to October, they missed earnings pretty badly and the price never went anywhere. It's going to basically take bankruptcy or something pretty close to being that bad for the price to go below 19. It's pretty safe to say that a lot of retail investors are holding this stock and they're not letting it go for less than 19. You can see here, it's been there since August. We've got like 4.5, 5 months where this stock has not gone below 19. So it's very safe to say this is where we're at. Looking at the balance sheet of Intel, you guys can see that they've done a large amount of total revenue, $54 billion for the year, $13 billion a quarter. However, gross profits are down to $2 billion and operating income is in the negative, and so is pre-tax and net income by a pretty hefty amount. Their EBITDA is in the positive though. This is something to take note of. EBITDA is very important. If the EBITDA is in the positive, which it is, then there's room to reverse this nightmare and disaster going forward. But not only that, their total assets are $206 billion with only $23 billion in debt, $85 billion in liabilities, which means they have enough to cover all debts, all expenditures, all liabilities, and pretty much walk away still in the positive, meaning the company is not upside down completely, only profit, but obviously assets outweigh liabilities. And not only that, their cash flow, their cash from operating activities is in the positive, almost $10 billion in trailing 12 months, $4 billion in the quarter. The free cash flow is $2 billion in the negative. With the grant and going forward, this should be rectified. If this cash flow is positive on the next earnings or close to positive, that will signal a turnaround for Intel. But we have to see how things go. This could take a year to turn this around, but it's a growth stock. And if they do turn it around, it could be exponential growth for shareholders at that time. Before I get to the number 3 pick, if you guys are having trouble understanding some of the technical terms I've been mentioning, like price to sales, price to earnings, EBITDA, revenue, net debt, total cash flow, if these things are confusing you, maybe you're trying to retire early, maybe you're having difficulty in the market, or you're just starting out and don't know where to begin, I offer a full training course in Discord as well as one-on-one coaching to help you achieve your financial goals and dreams. And I told myself when I achieved financial freedom that I would help others do the same thing, which is exactly what I love doing every single day. I have students that have been able to take their portfolios from 8,000 to 40,000 in 5 months, others from 300,000 to 800,000 in the same time frame. If you would like this to be your success story, you guys can sign up, like I said, anytime, investinthecorey.com. The link's in the information box below, but don't take my word for it. Let's hear what my students Adam and Shane had to say.
When I first started off with options, I knew nothing at all. Corey's program broke it down into very simple steps. Corey broke them down where it was nice and simple, and I was like, oh, okay, I totally understand that now.
How much are you up since the start of joining my program?
Oh, you know what? Hold on, I'll give you the exact number. Let me bring it up. On average, I was making about $2,200 a month day trading. That was average. In the very first month that I started actually selling options, it jumped up to $14K. And right now in December, I'm already up 6.4 thousand.
You went from day trading to my course and you were able to go from 2,200 to 14K.
Correct. And I'm up 165% right now.
If someone was trying to decide between my program or another Discord, what would your direct and short message to them be?
Corey's program will save you time and make you money. That's the bottom line right there.
What would you tell someone who is skeptical about learning from someone online like myself?
I bought into multiple different programs. From my experience, Corey's is the safest, very consistent and profitable.
How long did it take you to actually make back the cost of joining the Discord?
From the time I started trading, I made my money back in 2 weeks, 10 days. If you want to count the actual trading days, 10 days. And then I just looked at it and I was like, holy cow. I'm like, I just made $14,000 this month. I'm like, that's like crazy. And, just 1 month, it blew away, almost my entire year of day trading.
What did you start off with in my program? Total capital portfolio. And what are you at now with profits?
Started off with roughly 50,000. I had 25-ish already in stocks. And now I'm up to 75,000.
So I started with 15,000, right? I am now at $40,000. Okay. And I'm so proud. It feels, amazing to be able to share this because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering because he means so well.
So you heard what my students Adam and Shane had to say. If you want this to be your success story, I would love to help you make that happen. It's what drives me every single day. I love helping and teaching others. You guys can sign up on the website, investinthecorey.com, click on training, watch the video. It will answer all of your questions. Then you'll be able to book a call with my team and I so that I can help you achieve your financial goals. The number 3 AI growth stock to put to your portfolio right now is Serve Robotics. Now, I've talked about Serve Robotics many times in the past. NVIDIA invested into Serve Robotics and they're heavily vested into the restaurant space with autonomous and robotic delivery. But there's some other recent news that has come out on Serve Robotics. Serve Robotics recently announced its agreement to acquire the assets of Vibu Incorporated, a trailblazer in full-stack automation and robotic solutions for restaurant partners. The acquisition strengthens Serve's strategic positioning by providing its restaurant partners with a suite of automation solutions and expanding Serve's offering beyond delivery into back-of-house automation. Vibu will help Serve become more integral partner to restaurants, accelerating partner adoption as Serve expands its geographical footprint in new cities across the United States. NVIDIA invested millions of dollars into Serve. I believe it was $3.7 or $4 million into Serve Robotics. Let's go ahead and take a look at the chart and some financials. So we can see here that the trailing 12 month is 1.68 million. Most recently, almost $250,000 at 221K. Gross profits slightly in the negative. Operating income slightly in the negative. Pre-tax net income in the negative by $8 million. Not a good sign, but they are startup and they are growth AI. This is where you want to get in, at the bottom, not at the top. We look at the balance sheet. We can see that they have total assets of $61 million, covering their total liabilities, and they have a negative net debt. It means they have $50 million in cash and they have more than enough assets to cover their liabilities. They're not upside down or on their head. So they're completely debt-free, 100% debt-free, and more assets than liabilities. Moving along to their cash flow, we can see that their total cash flow or free cash flow and their cash from operating activities is in the negative. Hopefully this will turn around. The moment that happens, that's the turning point at which the stock will grow even better. It's kind of just been sitting in a $9 to $15 range. Nvidia bought into them back right here in July when the stock was around $2. It jumped all the way up, way overvalued at that time. Even for the current situation, way overvalued. The stock pulled back. I think the value of between $6 and $9 is pretty good. Good chance to get in and make a good return. Right now, you still can do that at $14, but instead of buying the stock outright, what I would likely do is sell some $14 puts, which are fairly aggressive, and some $11 and $12 puts. Try to utilize options and or wait for the stock to pull back, because I would think that getting into serve somewhere between $10 and $12 would be really good. It's still a good price right now, but I think you might be able to get it slightly better. But long-term, serve is a very solid play, in my opinion, with delivery and restaurants, as long as they don't run into vandalism and things like that, but there's always insurance. Moving along to the number 2 pick in the list. Now, this stock, quite simply because of its strength and its time and length in business, which spans 4 decades or more, you would think this wouldn't be a growth stock, and it's not a growth stock. In fact, it shouldn't even be in this video. The only reason why it's in this video is because of the fact of how cheap you can get the stock now based on where it's likely to head in the next year. It's going to give you growth stock-like returns. And in fact, this should actually be number 1 on today's list. And the only thing stopping it from being the number 1 pick is quite simply that it's not a growth stock, and that wouldn't be fair to put it at number 1. Plus, there is some risk of downside potential in the short term with this stock. However, this stock has a lot of room to grow, and it's actually a mega cap stock, but there's so much potential. Are you ready? The number 2 pick, without further ado, and a lot of you guys have been asking about this over the past month, and it's returned to my top 5 list. Number 2, AMD. So you might be asking the question, why would you pick AMD for an AI growth stock video? Well, I already covered that, but it's got so much growth potential. That's why it's here. If you're wondering, hey, why'd you pick AMD at all? Like, why would you even put AMD in this video? Well, the reason for it is because AMD has a lot of growth potential. Let's take a look at the financials, talk about AMD, and not to mention they've got some really good chips. I have the 5950 in the computer that's recording this, and I also have the 7950 3D, which is also really good, and the 9950 is insane. Their video cards are good. They got the Radeon cards. They also have the 3D chips. And I'm just being honest that their chips are very good. Now, in some ways, they're not as good as Intel chips, because on my PC, you can see beside me, or behind me, I have the 13900KS, and in my other computer across the room, I have the 14900KS from Intel. But AMD make very good chips. In fact, AMD has more of an upside this year, potentially, than even NVIDIA, in my opinion, because you're only going to lose market share when you're that big. NVIDIA is not going to gain any more market share. That's not happening. Qualcomm is building new chips. ARM is in a legal battle with Qualcomm, and Qualcomm also tried to purchase Intel. Intel just got a chip grant of almost $8 billion. They're building 3 new facilities, and AMD are ramping up for their new chip releases that are upcoming. There's no way that NVIDIA is going to increase its market share. It's physically and mathematically impossible. They're only going to lose, and they're only going to give up some of that. How much? Hard to say, but they're only going to lose market share, and they're going to lose it to Intel or AMD or both and Qualcomm. So if AMD can beat Intel to the race and putting out better chips quicker, then they're going to take up more of that market share quicker, which is why Intel and AMD are both in this video, because they both stand to gain market share from NVIDIA. This is from a factual and a mathematical standpoint and a business standpoint on how things grow. The biggest company is always going to lose some market share over time, and Intel, Qualcomm, as well as AMD are going to pick up on this market share. You're going to look back at this video and say, you know what, Corey, wish I had gotten into AMD. It's hard to say exactly where they're going to go and how fast they're going to go there. I pretty much make a bet with you that this time next year, AMD is highly likely and highly probable to be much higher in stock price than they are right now. In fact, I'm thinking AMD is likely to be between $165 and $185, maybe even $200 by the end of 2025, which pretty much means anywhere from a 40 to an 80% return in less than a year. That is pretty good considering covered call premium, cash secured premium. There's a lot of money to be made on AMD, and I think that is the reason why you're pretty much going to agree with me that it belongs in this video. There's a lot of upside. Do we think that NVIDIA is going to return the same result? Well, that means NVIDIA would have to go to $225 a share, and that's possible and maybe likely. AMD is undervalued, and I think that NVIDIA is a great stock to own, but their mega cap and their growth is already slowing down. In fact, the stock hasn't really done anything in 8 months, and AMD really hasn't either, but they were doing better until most recently when some guidance was cut. But I'm telling you guys right now, AMD future is a solid play. So we can see here, looking at AMD's chart, they are down tremendously. We haven't been this low on AMD since this time last year. And it was a pretty rough time last November and December, as you guys can see right here. But then the stock started shooting up. And with the fact of the presidential election being completely over, uncertainties over, and basis points being cut from interest rates, and the interest rates being cut, and 25 basis points most recently being cut, things are priming themselves to be a good year for AMD. And we can see that Morgan Stanley has maintained equal weight rating on advanced micro devices, AMD, reducing the price from 169 to 158. We're nowhere near 158. So the price target for the year is still 158. So we can see that the price target is 158, but other analysts still have $169 to $190 rating on AMD, depending on the analyst that you look at. So even at worst case, there is still a $40 to $50 upside on AMD or better. So there's lots of growth potential here. I think AMD is going to settle in nicely. If we can see, there's a lot over here going on in this range at 120, which is right here. And I would say that based off of this chart, there's a lot of support in here at 113, 110, and 115. And if the stock was to even go as low as down here, we could fill the gap in the 100 range, but I don't think it's going to get that low. Maybe 110, maybe 105, but I'm not 100% sure exactly where the bottom's going to be at this point, but there is a lot of support, as you guys can see in here. So somewhere between 105 and 115, there's a lot of support, and it's really going to be all on earnings in February. If they meet or beat expectations, the stock will continue to go up. It's likely to go up before earnings anyway. This always happens. So about 2 weeks before, last 2 weeks of January, the stock's going to start going up. It's a matter of what happens in the first 2 weeks of January and this next week. So the stock is likely, in my opinion, to kind of come up a little bit like this and then pull back into the new year and do this number. And as we get to the middle of January, look where we're at, probably around 105 to 110. But then as we get closer to February, it'll start to come up. And then on earnings, if they meet or beat, it could go back up. And as long as they meet the expectation or beat it, we're right back up in the 160 range, maybe 145, 150 range, somewhere up here. So by getting in between 105 and even 120, there's still a $20 to $30 upside in the next 3 months. But this is all based on if they can meet or beat the expectations. Obviously, the next earnings in February is going to encompass Christmas shopping, PC building, and their revenue during this time, which inevitably is better, which is why if you look at different charts in the stock market, you'll notice that earnings for February are usually pretty decent because it encompasses Christmas time. So I anticipate, even if AMD has a rough second quarter's earnings in 2025, February's first quarter report of earnings probably going to be decent. So this is something to seriously consider. Market cap is 193 billion. We go ahead and look at their financials, and that is 24 billion. We take 24 billion, we put it into 193. That's going to give us around 7, just a little over 7.5. Let's take a look at the calculator. 193 divided by 24.3 gives us 7.9. Pretty good for thinking on my feet in my head, right? We got total revenue $24 billion for the trailing 12 months, gross profit $3 billion, operating income $710 million for the quarter, pre-tax $737, $771 million for net income, EBITDA $1.5 billion. Total assets are easily covering liabilities and no net debt. This is another critical reason why AMD is such a good stock right now to buy. Look, fam, $70 billion in assets and their liabilities are only $12 billion. They covered liabilities and their net debt is negative $2.3 billion, which means they're sitting on $2.31 billion in cash. So they have more than enough cash and assets to cover any liabilities they may have. They're completely standing upright and they're in charge of their finances. If we look at the cash flow, $500 million in cash flow, $1.56 billion in free cash flow for the trailing 12 months. This is super incredibly strong. And their operation activities cash flow is $628 million, $2.12 billion trailing 12 months. All of these numbers, everything I've given you on AMD tells me, even if I wasn't as bullish as I am right now, it is incredibly bad decision not to buy AMD even at 120. Sure, it might go down to 105 or 110 in the next month. You'll be a little bit in the hole. It's possible, just dollar cost average. Then when the stock goes up, you make money. But either way, going into February, March, April, this stock, I just don't see it being below 120. The numbers are so strong. I can't say anything but buy and dollar cost average and buy the dip. AMD is where it's at. You'll look back, just like with my previous trades where I told you guys to buy Wayfair, it went up. I told you guys to buy Robinhood. I told you to buy SoFi, SoundHound. I told you guys to buy Palantir. This is another one. I'm telling you, AMD is really good. Like I said earlier, guys, if you're having trouble understanding the things that I'm talking about, you guys can sign up for my coaching and Discord anytime. The link is in the information box below, investwithcorey.com. I love helping others achieve their financial dreams and financial goals. Let's move on to number one. This is a stock that I've talked about so much. In fact, I gave so many buy ratings on this stock and trade alerts to get in when it was $3, $4, $8, $10, and now it's over $20. This stock is going to blow everything out of the water. And I'm telling you, this is the biggest growth AI play right now, which is a given. Why I put it on number one in my list. Number one, we're talking about it again. Are you ready to celebrate? Number one, SoundHound. Now, I know that a lot of you that are new to the channel might want to know why I picked SoundHound. Look, I'm going to read you guys some information on SoundHound, which I've already done in a previous video, but we're going to drop this information again in this video. And this is partially the reason why. In fact, this is a big reason why, even though I already knew SoundHound was going to be a great buy earlier in the year. NVIDIA is working with SoundHound, and it's going to give them cutting edge advantages over any and all of the competitions. Let me explain. And not to mention, Wedbush, Dan Ives, has raised the price target on SoundHound to $22. Thanks to its innovative voice AI products and close relationship with NVIDIA, Wedbush boosted its price objective to $22. This was Dan Ives from $10. Maintaining its outperform rating on the firm highlighted SoundHound's AI approach and stance. The NVIDIA cooperation changed SoundHound's advantage speech generative AI technology, claims Wedbush analyst. This method disables cloud connection, therefore improving the speed and efficiency of programs. At the CES 2025, SoundHound will introduce its voice commerce environment, therefore attaining a significant turning point in e-commerce. This is going to be huge in the restaurants and e-commerce. SoundHound has been driven forward by wise financial management and increasing income. The company's aggressive M&A approach, which includes purchases of Amelia, Sync3, and Allset, has extended its restaurant and automotive offerings. And now they're going to be working in, of course, retail. These steps equip the company for the expansion in the corporate artificial intelligence spending, according to the analyst's note. Apart from its strategic initiatives, SoundHound is introducing goods with an entrepreneurial emphasis in its range. Retailers and automakers debuted conversational systems and next-generative artificial intelligence voice assistants, particularly in edge applications. These projects align with trends in AI usage. Wedbush is still optimistic even if SoundHound's SoundHound's substantial valuation is under strain. Its prospective income growth rate of 74%, however, compared to the industry's norm of 5.6%, points to it maybe upsetting the speech artificial intelligence market. By using its NVIDIA partnership and business reach, SoundHound might expand notably by 2025 and beyond. This is huge. This is the stock that you want to get into right now. SoundHound is it. You guys all know I told you to buy this stock back in April, May, June, July, way back here when the stock was $5. And this move could have been yours. It could have been yours, but it's not too late. You can get into SoundHound now. I've been selling aggressive puts on SoundHound. I would say you could be going out 2 to 3 weeks or even a month and selling some 13s and some 14s and maybe even 15s, just collecting premium. And if the stock dips down and you get assigned, awesome. I would not be worried about that one bit. We got a market cap of $8 billion and we have a trailing 12 months of 67 million. This is kind of a high price to sales. It is somewhere in like the 100 range, probably a little higher than that, which is not good, which is what makes it a perfect stock to buy because its growth is going to be so exponential. Total revenue, 67 million. Gross profit, 37 million over the trailing 12 month. Operating income is in the negative. Pre-tax and net income negative. They haven't broke profitability yet. EBITDA is not in the positive either. Balance sheet though, total assets do cover liabilities and their net debt's negative $97 million or $91 million. They have $91 million in cash and their assets cover their liabilities, double them basically, and they have no debt. So that's very good. They're not on their head or upside down, only in profit. We look at cash from operating activities, it's in the negative, and free cash flow is slightly in the negative. They've got to generate some money, and they're looking to do that immediately with the acquisitions of Allset, Sync3, Nemelia, and expanding with NVIDIA into the generative AI for retail. All of this is going to happen. We will find out on the next earnings. The previous earnings was pretty good. Their guidance say negative 10 cents for March, which is the next earnings. Let's just hope they can beat that. And if they do and get closer to zero, this is going to explode even more. And I wouldn't doubt that before then, we have some news on the partnership with McDonald's and even more restaurants and even more growth, which is going to further drive the stock. And I would anticipate that this is a very sandbag, very conservative and low ball estimate or guidance. I got a feeling they're going to come forward in March with much closer to zero, maybe even positive earnings with all of this potential growth and them taking advantage of NVIDIA technology. Well, these are the top 5 growth AI stocks to add to your portfolio. If you guys want to join the Discord, the training course, and have one-on-one coaching and take control of your financial freedom, maybe you want to retire early or just learn and grow your finances in the stock market, I would love to help you. You guys can sign up at any time. Investocorey.com, links in the information box below. When you get to the website, click training, watch the video, and then book a call with my team and I so that I can help you achieve your financial dreams and financial freedoms that you ultimately deserve. I'll see you guys on the next video. Take care of yourselves.